Oh, all right. Good morning, everyone. It is 9:03 in the morning of June 10th, 2022, and this is my pre-market strategy session. So today, uh, the CPI report came out this morning, and I believe it said it was 8.6%. Actually, I've already forgotten here. Let me check it out. I'm going to pull up Yahoo. I'm going to pull it up on another machine because doing video and graphs, charts on my little graphics card is killing it. So I'm gonna pull it up on the. I've got a trading machine next to my charting machine here. So let's see. Yeah, consumer prices rise 8.6% in May. So the May reading came out really hot, and that means the title of the video that I'm putting out today is hot CPI equals hawkish Fed equals less liquidity, which equals lower prices. So when CPI comes in hot like that, that's a signal to the Fed to tighten monetary conditions, which reduces liquidity to the stock market, which means there's less money out there willing to purchase stocks. And so in order to sell a stock, anybody who wants to sell a stock has to accept lower prices to do so. So, the pre-market is actually quite a bit more, how should I say, subdued than I imagined. When liquidity, I guess you could say the sort of the threat of liquidity drying up really hits the market, I mean, I really expect there to be a much more significant down move. And so I think what Wall Street is seeing is apparently there is a lot of cash on the sidelines waiting to come back in. And I think, for example, Warren Buffett, the last time I looked, Warren Buffett had some gigantic amount of cash sitting. I mean, he went to, I mean, many billions of dollars in cash. And there are a couple of other examples of that, like Ray Dalio. I don't think he's not in so much cash, but I know he's got some powder dry. Like, just all the big hedge fund types are just have huge cash positions right now, and they've been building them for like the past year, And so I guess Wall Street is kind of like, okay, well, everybody out there with all these huge cash positions, is this low enough to bring you back in? Well, who knows how it's going to work, And so basically, pre-market here, I say it's only down 1.58%. But I do expect it to go lower before anybody like Warren Buffett or Ray Dalio or who knows, Blankenship, all the other big hedge fund like BlackRock. I've forgotten the name of the guy who heads up BlackRock, who's the CEO of BlackRock. Just Cornerstone, all of the really big hedge funds. I think they're still sitting tight and waiting to put cash to work. And so I think that we're going to get probably, so we're gapping down today. Actually, let me put the daily up. We're gapping down today, and I imagine that we're going to come down after the CPI reading. I imagine that the Qs at least will come down to challenge this bottom level down here, right here, rather soon, relatively soon. And then, I think that we'll probably start to just drain down. Let's see if I can, let me give myself some space here to work with. And we'll just kind of start doing a steady kind of, down, might be an up, but then kind of, there's going to be kind of just like a steady sell-off for probably the next 2 or 3 months. That's just my guess. I have no data to back that up other than it's just experience of having been involved in trading now, for quite some time. That now, instead of the crash down, we're probably going to see the steady sort of movement down. Just kind of steady, slow sell off. There might be a capitulation moment. There might be a big volume, one day where there's just, a huge amount of volume, and then that'll be a signal to buy. But I don't foresee that until, probably, let's see what, it's almost halfway through June here. I mean, maybe July, maybe August. So, yeah. So today, I'm definitely looking for opportunities to sell today. So we're opening up oversold, but so today could be a crash day. Today things could get crazy today. Markets crash from oversold conditions. And so today I'll be looking for an opportunity to go short, but that's after I already have a whole bunch of short positions on. And so after it kind of does a little like intraday relief rally, it will happen. There at the open there will be swift and vigorous down movement, and then it'll finally start to like kind of settle out, or it might even spike back up a bit. I'll be looking for overbought conditions. If I can get overbought conditions today, I'll be looking for overbought conditions to go short on the Qs. I probably won't do the SPY. Well, certainly play the Qs if it goes into overbought, if we get overbought conditions today. And overbought conditions would happen on sort of like a little relief rally. Like once all the big selling gets done, I imagine after the open, somewhere around a half an hour to an hour after the open, there'll be a spike up. I don't know if it'll bring us all the way into overbought conditions or not. But if we do get overbought conditions intraday, I will be looking at those conditions for an opportunity to short it. West Texas, in fact, actually West Texas here, intermediate, bounced off the top end of its range, and we're getting a little bit of a pullback here now. If this were closer to the middle of the range, if this sort of pullback, this open right here, a couple back-to-back red days, actually back here on this pullback right here, these 3 days, I was like, man, I should go long this. Like especially after these 2 days right here, I was like, I should buy oil, and it would have been hard to hold on to long oil on this day right here. And that's a big bottoming candle from 110 to 113. But at the time, it was closer to the middle of the risk range, and I just didn't pull the trigger. Now here we are close to the top of the risk range, and we're getting a pullback. So I want to wait a couple of days here to see what oil's doing, because it might actually try and make a move all the way back down to the bottom of its risk range again. And that could be this top right here could be a sort of a, this could be a top that is in for like the next month until, at some point or another, oil gathers more steam to go higher. I mean, it's had a really good run here. Let's see. This is May. Yeah, this is the first week of May to the first week of June. And from bottom to top here, there's been a 25% move in oil. So entering along oil right here, it's just, I don't think it's a good spot. I want to wait for the bottom end of the risk range to come in before I get into an oil position long. But I am still bullish oil for the foreseeable future. So, all right. Next is, let's see, the dollar. Yeah, the dollar's breaking out above its risk range. Being along the dollar is a great place to be for the foreseeable future. I would wait after this rip. So I started averaging in it's been difficult. Back here on the 17th of May, I started averaging into a long dollar position, and I averaged in down this whole damn thing. But that's the way it goes. Sometimes. And actually, it's been tough. It's been really tough, but it's going to pay off today. Let's see. In this move right here, I averaged in close to the end of this day right here on the 17th. So let me, and I did average in on this day too. So I'm just going to take it from the top here to there, down 2.51%. So not bad. That's a big movement for the dollar, though. Traditionally, the dollar doesn't move this much. The dollar is usually a lot more quiet. Well, maybe. No, this is. I don't know. Anyway, yeah, it's moving. It's moving in my direction. Everything's going well. All right. So on the dollar, look for an opportunity for it to go into overbought conditions, which actually it will open up into today. But I have a feeling today that even though it's opening up into overbought, that there's gonna be both a crash at the open in the Qs. I mean crash by just fast down move. I don't mean crash as in down 7%, hitting the limit, the down limit, and triggering a market halt or anything. And then the same thing on the DXY. I will be taking some profits after the open does its thing. But then after that, I'll be looking for opportunities for the Qs to go into overbought, or the dollar to go into oversold, to open up a trade for the long side on the dollar and short on the Qs. Short on Italy as well. Wow, it's down 4.32% pre-market. Wow, look at that. Wow. Yeah. And then, Bitcoin's probably getting its butt handed to it right now. Let's check out Bitcoin real quick. So Bitcoin has been incredibly resilient in this level now for about a month. Yeah, about a month right here. But this is its neckline. This is the down line. This is the price of Bitcoin is going to follow this red line for years. So that's just the way it's going to be. Bitcoin's probably headed further down today. Okay, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you on Monday morning's strategy session. Have a great weekend, everybody. I am out.